The SPY briefly hit a new all-time high today. Here in this video, I will share with you your biggest headlines and market-moving events of the day today. The Trump administration is planning to lay off at least 40% of the workers at the Federal Housing Administration. Now, this may sound bad, but really, this is like FHA mortgages, okay? It was created to be something totally different than it is today. FHA was created to make it easier for people to get a loan. And sure, FHA is 3.5% down instead of 5% for conventional, but the fees are the same. So there's barely any impact to buying a home, if any at all, from FHA. In fact, it's pretty hard to get an FHA loan. If the paint's chipped, stupid things, you can't get an FHA loan anyways. I've bought several rental properties and I've never got FHA because whenever you're buying them, it's like one wrong thing and, well, you can't get a FHA loan. So like, there's really no point in this organization if we're being completely honest. China's ambassador to the World Trade Organization says U.S. tariffs create tariff shocks that heighten economic uncertainty, disrupt global trade, and risk a global recession. This really sticks out to me because China does not seem interested in going into a further trade war. I don't think their economy can handle it, number one. And number two, they really just cannot compete with the U.S. in this regard right now. This is a much different picture from 2017, 2018, when China was in a better position to essentially go through with a trade war against the US. I would say this is positive overall. Now, Donald Trump did post on X about trade. He says, quote, "On trade, I have decided for purposes of fairness that I will charge a reciprocal tariff. Meaning, whatever countries charge the United States of America, we will charge them. No more, no less." And I do think this is overall a positive for markets. And let me tell you why. Because this creates certainty. No more, no less. So if countries are going to lower their tariffs on the U.S. is going to have a lower tariff for them. We kind of know what we're getting ourselves into. Okay, with all of these different trade partners. And it could offer some concessions, likely will, from EU nations, from China, from Mexico, and from Canada. We tariff you what you tariff us. It's pretty simple. And I think that could bring out a much more positive impact from tariffs than we previously thought. And Trump is showing that he's not, you know, this ravaged individual that is trying to destroy trade. It's simply just going to be fair across the board. This is certainty that I think markets will grow to really like. Because as I said many times here on this channel, markets can handle bad news. They cannot handle uncertainty. And this does alleviate a lot of that uncertainty. 27 counterparties take $77.817 billion at the Fed reverse repo operation today. This is getting down to pretty low levels, and if you continue to fall from here, you are likely going to see the end of quantitative tightening. This is what determines whether the Fed can continue to run off their balance sheet or not. And you're getting down to some pretty low levels in which the Fed pretty soon could end quantitative tightening, which would be a positive for markets and help at least bring down 10-year treasury yields. Ed Barr says AI presents some risks. He says the AI speed risks generating issues on a wider scale. Mexico's economy minister Ebrard and deputy ministers are to meet with the U.S. Commerce Secretary in Washington. China's ambassador to the World Trade Organization says U.S. unilateralism threatens to upend the rules-based trading system. WTO must have its voice. France convenes a second meeting to discuss Ukraine and European security on Wednesday, including NATO allies who were not invited on Monday. Ukraine's President Zelensky postponed a visit to Saudi Arabia in order to not give legitimacy to the US-Russia meeting in the country. And a U.S. appeals court blocks the Biden-era student loan debt relief plan. Fed Daily says today, we want to be careful before we make the next adjustment that there's enough pressure on inflation. Also, I don't want to shortchange the labor market. Fed Daily says there is no reason to be discouraged about inflation progress, but taking longer than anyone wants. And she also says, or was asked, if there will be more rate cuts this year. Says the world is uncertain. So basically, they have no idea. New York Empire State Manufacturing Index came in today at positive 5.70 versus estimates of -1. So this was much better than feared and much better than last month's reading. One of the first positive readings we have seen in years. We've actually only had 4 positive readings since 2023. So that data looks pretty good. February NAHB Housing Market Index came down to 42 versus 46 as was the estimate, and 47 in the prior month. Every subcomponent weakened, with future single-family sales falling most from 59 to 46. And, the NAHB is the National Association of Home Builders, represents more than 130,000 members who build American homes. And I think a lot of this has to do with interest rates starting to bite. People just can no longer afford to buy a new home, not with prices where they are and with rates where they are. Surprisingly, though, considering this weaker than expected economic data, 10-year Treasury yields are actually up over 6 basis points today, which honestly, I can't tell you exactly why that's happening. Although the New York Empire State Manufacturing Index came in a little bit stronger than expected, there's not a whole lot of rhyme or reason to 10-year Treasury yields rising today. In the news today, Putin is allegedly not seeking a, quote, real peace deal. Intelligence from the United States and its allies suggests that Russian President Vladimir Putin is not interested in a peace deal and instead seeks to gain full control of Ukraine. NBC News reported on Tuesday, citing Western intelligence officials and U.S. congressional sources. Quote, we have zero intelligence that Putin is interested in a real peace deal right now. One of the sources said, he thinks he's winning. One of the Western officials revealed, adding that Russian losses on the front lines are not forcing the Russian president to end the war. Now, tomorrow, Wednesday morning, we will get building permits, preliminary data for January. So we will see how much the NAHB Housing Market Index is going to affect building permits and housing starts. Are these things that, we should really be concerned with? We will know more coming tomorrow morning. Now, you will also get the FOMC minutes, which is kind of like a transcript from the last Fed meeting, not word for word, but the important parts that the Fed wants you to know. That comes out at 2 p.m. tomorrow. That's going to be probably the biggest catalyst of the day tomorrow, but it's not something that tends to dramatically move the needle for markets. It can give the markets a couple big candles up or down. It can kind of change the sentiment around any given trading day, but it's not like a CPI report. It doesn't change the story at all for markets and where markets are at. Now, on Thursday, we will get initial jobless claims. Very important to watch right now, as a lot of reports are coming out that Washington, D.C. and surrounding areas are now entering into a recession, as Doge and a lot of government employees have been laid off. You will get Philly Fed business conditions, CapEx index, employment, new orders, and prices paid. Specifically, this prices paid component being the most important. Fed Goolsbee will speak on Thursday. He tends to be a little bit more on the dovish side, so we'll see if that can help boost markets. Thursday, you also get the core inflation numbers out of Japan, which could also be important considering we had the yen carry trade blow up as the Japanese central bank raised rates back in August. So higher inflation could pose some issue. On Friday, we will get S&P Global Composite PMIs, manufacturing PMIs, and services PMIs with a big focus on services. If services continue to weaken, that's going to be good for that disinflation story, but services are 70-80% of our economy. That's going to be a bad sign for the economy. So definitely something to watch there. Existing home sales for January will come out at 10 o'clock in the morning. And then final numbers for Michigan consumer sentiment will also be coming out. You really want to watch those 1-year inflation expectations if those come back down. They spiked 2 weeks ago to 4.3% from 3.3%. A lot of it was just skewed by Democrats. If you do see that come back down to something like 3.3%, that would be good to see. And I think markets overall would like that. Now, here on the day today, the CNN Fear and Greed Index is coming in at 46, which is higher than Friday's close of 44, but you're borderline between fear and neutral. Market momentum is neutral. Stock price strength is fear. Stock price breadth is fear. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand, extreme fear. And junk bond demand is currently in greed. If we take a look at the percent of stocks trading above their 50-day moving average, moving up today, 2.69%, but still only sitting at 54%. It's still not like a super great market that we're in. And we really haven't seen a broad-based market rally since the October 2023 through really January 2024 rally. This was the last big breath thrust that we've seen in markets. We've had a couple smaller ones since then, but you really have not seen a broad market rally in a long time. And you still have almost 50% of stocks not even above their 50-day moving average. So from a contrarian standpoint, I think this means we could have a lot more upside in store. Just my opinion. Now, again, as I've shared with you guys on this channel already, we have hit a 1-year bearish high, but really a multi-year bearish high for investor sentiment via the AI Investor Sentiment Survey that asks members one question, quote, what direction do AAII members feel the stock market will be in the next 6 months? 47.3% of respondents say lower, 24.3% say sideways or neutral, and only 28.4% say bullish. So right now, even as the S&P hits a new all-time high today at $611, trading lower what looks like into the end of the day, you still have investors that are very bearish overall. Now, keep in mind, over the next 2 weeks is the worst 2-week period for markets. Things do improve in the first half of March. It's one of the better periods for markets. The second half of March is neutral. You don't tend to do much, but then April is one of the best months for markets overall. So once we get through this next 2-week period, seasonally speaking, historically speaking, markets should get better throughout the spring and into early summer. Even into July tends to be a pretty damn good month for markets as well. So if there is a time for markets to be pretty volatile, to maybe fall a little bit, it could be here soon. I will really preference that with saying you just broke a downtrending trend line. So we are in what I would say is a technical breakout. You gapped up, you really had a strong close above this downtrending trend line, and that could likely send us into a new trading range before trading sideways, maybe coming back down again. But from a technical standpoint, markets actually look pretty good here. We do have some earnings today in after hours and some important earnings throughout this week. Today in after hours, you have Arista, Oxy, Devon, Toll Brothers, Cadence, and some others. Tomorrow morning, you have Etsy, SolarEdge, Garmin, Wix, Fiverr, Tech, Analog Devices, and Wingstop. Hear a lot about their ranch, that their ranch apparently is really good. Wednesday and after hours, you have Carvana, Toast, Cheesecake Factory, BioMarin, Exact Science, Bush Health, and Vail. And then Thursday, you have Alibaba and Walmart, as well as Unity, Wayfair, Baxter, Jumia, and some others in pre-market. Walmart is really the big earnings for this entire week. Walmart is the big one, okay? And Walmart's going to tell us how the consumer is doing. It's going to give us, I think, better data to economic activity. If Walmart has good things to say, then I think we're good from an economic standpoint. If Walmart has bad things to say and they talk about a consumer slowing down and retrenching, not spending as much, that is a major red flag for our markets. And that's going to show up, on Thursday, we're going to know that, in which the economic data may not tell us that for many months. Walmart back in 2007 was one of the first companies to really warn against a slowing consumer, that the consumer was slowing down and things did not look good, Wall Street took notice at first, but it took many months until Wall Street really started to get concerned. And I think that would be a big mistake if Walmart is negative on Thursday and to not heed that warning. Again, if Walmart is positive, then maybe, things will continue to be good in the broader economy. I think Walmart is your first signal of strength or weakness. No matter when the report is, it could be a year from now. If Walmart is still optimistic on the consumer, that's good. If Walmart starts to turn more negative, something to definitely pay a lot of attention to. Thursday and after hours, you will have Mercado Libre, Rivian, Block, Newmont, Booking Holdings, Texas Roadhouse, Guardian, Five9, and Dropbox. And then Friday pre-market, you have some smaller companies. So ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.